Guys, tonight we're going to talk about what's been going on the past 2 weeks. Obviously, we haven't spoken, so I hope you guys have been making adjustments with what's going on in the market. There's been a lot of volatility for sure, and we have to keep positive reassurance that we know exactly what we're going to do when it comes to this crisis. So first of all, we're living in historic times. There's no doubt about it. 20% unemployment rate, most likely. And I was actually reading a study that 45% of those jobs aren't coming back. So you're going to be able to find a lot of really high qualified candidates that are going to be out there looking for good jobs. And what does that have to do with our investments and our portfolio? Well, it's got a lot to do with it. The Dow futures for tomorrow are already up 200 points, which is a good thing, but I wouldn't count on that. Probably by 10 o'clock tomorrow, it's already going to be down. It's been going like that all week, up and down. It's been a crazy market. And what we're seeing right now is kind of like the Japanification of the US economy, where the US is printing trillions of dollars to save the markets. And what's going to happen to the currency, that's something we need to start predicting, because you've got 0% interest rates right now, and there's speculation that we could go to negative interest rates. It's ridiculous. We've never seen anything like that before in our history. That's what they've done in Europe and in Japan, and it hasn't worked at all. But they're going to try to do anything they can to try to pent up demand in this market. As you guys know, a lot of states are starting to open up, so we should see some positive action in the markets because of that, but I wouldn't hold your breath. I think right now, and this is my opinion, I'm going to ask Brennan about this because I really want to see what he has to say. I think you need to get very protective right now of your assets. I wouldn't be keeping a lot of your assets in cash, because I just think that there's going to be a lot of inflation with some of the quantitative easing that they're doing. Just think about it. If you print $10 trillion, what do you expect to happen? The value of that money is going to go down. It's just simple macroeconomics. And right now, gold is on a bull market. If you guys have been keeping track of gold, it's probably something you want to get invested in because it just broke its resistance. And if I can share my video, I'll be able to show you that. Can you see this now?
Yeah.
All right, cool.
Is that an actual ticker for gold, GLD?
Yeah, yep, GLD. So that tracks gold. You can buy that right now for 163.93. As you can see here, it just broke its resistance. So I think this is something that's going to break records, personally. As you can see, 10 years ago, if we look at between 2011 and 2012, it was above 180. We're definitely going to break that. Brennan, what do you think about that?
Sorry, I was pulling up the chart on my E-Trade to look at it, do some technical analysis too. But yeah, I think gold is a good hedge, a really good hedge, because it's held its value. Well, gold has been valuable for, you're talking about hundreds of thousands, if not, tons and tons of years. So I'm just looking at this chart and I'm trying to splice it up a little bit. But yeah, you're absolutely right on that green. Is definitely a resistance point at 163. All said and done, easy. Once it breaks through that 163 mark, it's got an easy ride to 175. If it rejects at 175, I would be cautious. But if we can push through 175, we should get to 180, no problem. And then over 180, it can really, that would be what's called a blue sky breakout, which means there's no resistance above head, which would send it, could send it to 200 plus.
Awesome.
Yeah.
Yeah. As you guys saw with the Kiyosaki video that I shared, he's predicting the US dollar to basically suffer moving forward because of all of this printing. So he's saying, look, you guys need to consider gold and silver to protect your assets. Because let's say you've got 50,000 right now sitting in a savings account. Right now it's getting 0% interest rates. So you're losing money to inflation. You're actually losing as a saver. We've never seen anything like it before, because when we look at our parents and the generation that came before us, they all saved and they did very well because they got positive interest on that money. CDs right now, you're not even getting 1%. We've never seen anything like it. So you need to get into, if not Bitcoin, gold and silver. I've done some more research on Bitcoin. I'm not really too experienced with it, but a lot of people are telling me I need to start considering it because it's not backed by a government. And in the event that something bad happens, Bitcoin's going to go way up. Right now, it's going for about 9,500 a coin. I don't know if you're starting to get interested in getting in that, Brennan. What do you think?
Yeah, I mean, well, it's going to be interesting because we haven't really seen something where the dollar has the potential to really lose its value. And I don't think we've ever seen something that drastic before. And I think people are going to want to look somewhere else for a safe haven for their money. And that could create a push towards cryptocurrency. It's hard to say if that would happen, but it's certainly on the table and is an option. And it may be smart to park some money over there just in case, because crypto is one of those two things that I think in 10 years from now, I'm going to say one of two things in 10 years. Thank God I didn't fucking invest anything in Bitcoin, or I'm going to go, I can't believe I didn't put every dollar I ever had into Bitcoin. Yeah, it's going to be, I'm going to feel one of those two ways in 10 years. I'm not sure how I'm going to feel, but either way, I think it's either going to go to nothing or it's going to really rally. And if I had to bet now, especially with the quantitative easing going on and the weakness of the dollar, I think crypto does stand a chance to really make a run.
Yeah, on top of that, a lot of foreign countries are trying to get off of the US dollar as the reserve currency of the world. As you guys know, the US dollar is the #1 currency worldwide. And a lot of our adversaries like China, Russia, Iran, they don't want that to be the case. So they're trying to use this crisis as an example to try to get off it and move towards a crypto or a digital currency. China is already working on their currency digitized. So they could move towards something like that, and the US dollar would be hurt big time. So we'll have to see geopolitically what happens between us and China. It's going to be very interesting over the next year because obviously with COVID-19, a lot of the stuff is coming out of China, and they are a major exporter to the United States. So we'll see what happens, but you guys got to keep an eye on that. Make sure you're tracking that. I told you guys 2 weeks ago, read the Wall Street Journal, check out CNBC, follow the news, make sure you know what's going on, because if something like that were to happen, you're going to see a big crisis in the dollar market. I don't know if anyone on here does Forex, but I know Lamarck does a lot about it. And he's been telling me like the dollar, it's got a potential to go under. So just keep that in mind because what the Fed's doing now, completely unprecedented. They're buying corporate bonds, which essentially means that they're going into the debt market of companies to keep financing them so that they don't go under. And if they didn't do that, we'd be in a Great Depression right now. There's no doubt about it. So that's why I understand why they're doing it. But at the same time, as individuals, we need to protect our assets. So that's like the main thing I've been focused on the past couple of weeks. And it's really concerning for sure. But I am going to stay in equities. I do believe that the equity prices, meaning stocks, are going to continue to be propped up by the government and the Fed. And the dollar is not going to be as much. So if anybody has any questions on that whatsoever, I can answer it for you. And then after that, we'll get into what Brennan's going to talk about.
Hey, I had a quick question.
What's up, brother?
Hey, so that post that you posted, saying to get into the gold and all that, asking like how much of that you really believe. What do you think about that? And how do you think that's going to affect? If that's all that's going to happen, it's going to be all true, or?
Well, it's a fact that the federal government and the Federal Reserve are printing $10 trillion. That's a fact. So if you look at from a macroeconomic perspective, there's going to be a reaction to gold. Okay, so that's why gold is on a bull run right now. And since it's breaking the resistance of 163, I do think it's going to reach 180 if we just track the charts. Does it go further than that? I really don't know. It really depends on if they continue to print money. I don't know if you guys saw, but the Democrats in the House just tried to pass another bill for another $3 trillion. And you know what else they want to do? They want to extend unemployment benefits until January. Can you believe that? They want to extend unemployment benefits until January. That's going to destroy consumer demand completely. It's a horrible idea. It's going to wreck the economy. And I don't think it's going to happen, obviously, because it's a Republican Senate and a Republican president. But that's just the type of thinking that's going on right now. They literally want to keep the economy shut down and destroy demand. In some aspects, I think it's political to try to hurt the president. I don't know what you think about that, but if that's the case and they keep printing this amount of cash, the US dollar is bound to lose its value. And the best hedge against the dollar, traditionally and historically, is gold and silver. I didn't mention silver, but silver you can get for like $15 an ounce, which is dirt cheap. Everybody can afford that. So I don't think you're going to be taking a lot of risk by buying silver.
Thanks, appreciate it.
For sure. All right, are we good? We're going to move into a couple stocks then. Brennan, what do you got for us today?
Yeah, so let's talk about GLD. Let's just look at gold. I'll pull this up for you guys and kind of show you what I see. All right, so I drew these white lines. This is my work because this is on my platform here. But okay, so first of all, you got to know what you're looking at. Each one of these candlesticks represents 1 month, and this chart in total represents an entire year of, or the last 10 years of what gold prices have done. So if you see here from, it looks like 2013 to 2019, we traded in this tight little range, which I would call a channel. Right up here, we had a little bit of a channel breakout, which the stock or gold has seen a nice little run. We've made this nice, U-shaped formation. Does anyone want to take a guess as to what pattern is setting up here?
A cup? Is that teacup?
Yeah.
Cup and handle.
Yeah, very good, guys. That would be a cup and handle is what this is starting to form. So I'm going to share, I think I'm sharing, so I'm going to go over to Paint and I'm going to draw. I just screenshotted my screen. Can you guys see this in Paint?
Yep.
Yeah, okay. So this is what I think is most likely going to happen here. So my paintbrush, okay. So we're going to kind of hit our head here on this resistance level, which could create a little bit of a false breakout. I wouldn't be surprised if this kind of just pokes its head up here for a second. It's most likely going to kind of do something like this to create the handle. And then this move is the move that you're going to see the violent action that should take us, all the way up to, some of these levels, in my opinion, just based on technical analysis. The other thing you could take a look at is that, if you were trading this, if this wasn't a super long-term investment for you, you could just play this channel here, and then you could buy on the low end of the channel and then sell on the high end. If you weren't sold on gold being a long-term thing, you could still play it, and there's quite a bit of volatility month to month. You could swing trade it, which means that you buy it for a month or 2 months or 3 months. Just make sure that you buy at the low end of this channel, and then I would sell at the high end of the channel. But just keep in mind where your resistance levels are. You don't want to buy near resistance. If I were to be a big buyer here, I'd like to see it break through this level, right? And then I'd like to see it come down, test it a couple times, and then I'd want to be a buyer. Because then if it holds, that means that this level is showing a support, and that means that we're going to move up. So I would be cautious buying the first time of the breakout, because if you look back in the chart history, this broke through, this key level broke through for a month, and then it was like, yeah, I'm good. And then it went on this huge collapse. So just something to be aware of from a technical analysis standpoint. If I were trying to buy this, I know right now it closed at about 164. I would ideally like to get it somewhere in this channel at the low end if I could. If I couldn't, then if this breaks through, I'd like to see the 164 hold, and then I'd like to get my entry somewhere around 164 for the inevitable move that it looks like this is setting up to go up to about 200 bucks. So does anybody have any questions? Which, by the way, 160 to 200, if it makes that move, which I think it will, that's 20% on your money. So, and gold is pretty safe, so it's not like a fucking, penny stock like I know some of you guys have been messaging me about, which that's a whole nother conversation. You're buying something that is a high risk, low reward, or high reward, low risk, sorry. That's kind of the setup you want to look for if you're using money that you really care about and you're not that experienced in trading. Any preguntas? Which is Spanish for questions for my non-Spanish speakers.
Are you investing a lot into gold right now, Bryn?
I don't have anything there. I've been mainly cash just because I want to get really strategic about what I'm going to do with some of my bigger money. Not my trading account, but my investing account. Gold is going to be in the portfolio. I actually also think I'm going to get a little bit of Bitcoin as well. And then I think I'm going to make a couple bets, and I'm going to get into some like index funds, I think is where I'm going to put some of my money and just kind of get a nice little blend. But I think, and to Vinny's point, I think inflation is inevitable. I mean, when you just talk about supply and just the basics of supply and demand, the supply of the dollar is going crazy high. There's going to be tons of money out there, and that's going to cause the dollar to weaken. There's no other way around it. That's how it has to be. So we'll see. Yeah, it is.
What do you think about guys like Warren Buffett, famous investor? He's got about 150 billion in cash right now.
Yeah,
he's highly liquid. He's scared of the market. It seems like right now he's waiting for a drop. He's not in Bitcoin. What do you think his thought process is right now?
Yeah, I think the way I'm thinking about it is kind of the way he's thinking about it. I don't think there's a clear direction of where things are going just yet. So I think he'd rather sit on the sidelines and wait until there's a trend or something that starts to really like kind of establish itself as the next clear direction. And I think once that kind of rears its head and really becomes prevalent, I think he's going to throw money at it. That's my 2 cents. I know he's a super big Bitcoin hater. Like he doesn't believe in Bitcoin at all. So it's interesting to kind of see different perspectives. Guys that are really well respected, like Kiyosaki, he's all in on Bitcoin. He has it going to 75,000. And then you talk to or listen to anything Warren Buffett talks about, and he thinks Bitcoin's a total zero. He thinks it's just, he thinks it's virtually worthless because there's nothing that it backs itself against. So it's interesting to kind of hear the different perspectives. But I think Buffett is waiting for a clear trend to set up before he makes a move. Just my guess.
So something like Bitcoin, that's not practical to buy in at $9,000 a share. So what is something else like we can definitely look at, like considering gold and silver?
Yeah. And I mean, and there's the other coins that you could trade too. But generally speaking, if I'm going to own something, I want to own the industry leader. That's usually your safest bet. So like, I mean, how many online, places are there like Amazon? There's a few I can think of, but putting your money in the industry leader has been the safest bet for years. So with the coins, like if I was going to put anything in any of the coins, Bitcoin's by far the most popular. And you hear a lot of people talk about like, I think there's like Litecoin and something with an E. There's so many coins that are out there. But generally, if you were going to get into it, the Bitcoin would be your best bet. I think there's a need for it personally. Like I'm not a Bitcoin hater. I think there is a need for a globalized digital currency. I think I mean, if you think about it, carrying cash is kind of old school given the technology that we have now and the capabilities. So it makes sense to have a digital. It's just hard to know if that would be what the world would adopt and use. So that's kind of what you're banking on, or at least many, many countries using it.
It's similar to fiat. The only difference with fiat currency is the government tells you this is what it's worth, right? That's the only reason why a dollar is worth a dollar, because the US government is saying, okay, we promise to pay you this amount for that. With the fiat currency, it's not backed by anything. With the cryptocurrency, it's not backed by anything.
Right.
So you look at Bitcoin, we don't even know who made it. They say it's some Japanese guy. Nobody really knows who he is. And it's completely unregulated. There's no central bank that's creating it. So it doesn't produce anything. So I'm kind of skeptical of it, to be honest with you. That's why I wanted to get your opinion on it, because I know Sebastian said he's getting in. He actually already bought a couple.
Yeah. Yeah, it's interesting because, like you said, there's nothing to back it. So it's worth whatever somebody feels like it's worth. Whatever people feel like it's worth is what it's worth, which is why you're getting these unbelievable volatility swings in it. Because I don't know, to me is risky, but if it goes to, $1 million a coin, then we're all going to look like fools. And we're going to look back at 9,000 and be like, wow, that was so cheap. I can't believe when I was, 30 years old, I had a chance to get into that and I didn't, you know, or it goes to zero and you're like, you know, thank God I didn't put my money into that. It was a fucking scam. You know, I don't know. But I think it's smart to probably have some just in case. But it wouldn't be an all-in strategy, and I don't think I would do more than 10 or 15% of my portfolio into it.
Even that's a lot.
Even that's a lot, yeah.
I mean, Bitcoin really came on the scene, what, 4 years ago, 4 years ago? Something like that?
I think it was created earlier than that, but it started getting popular in the past 5 years, yeah.
Right. So, I mean, it is proven its worth or whatever that is. But like I was just saying, somebody like me, you know, just to put in $9,000 a share in a Bitcoin that doesn't know what they're doing, I don't think it's practical for me, you know?
You don't have to buy a whole Bitcoin, though. You can actually buy a percentage of one.
The percentage, okay.
Yeah, you can. You can own a fraction of a coin, which is kind of cool.
Cool. Didn't know that. Thank you.
Yeah.
But it's crazy. I mean, if it ever got to 75,000, imagine the amount of money you could make if you owned one.
Yeah, I mean, it's bananas. But it's just like things to think about, right? So, like, I was pretty actively trading in, I think 2017 is when it had its big run, the end of 2017, I think, or was it the end of 2018? It was in December.
It was 17.
Was it 17? Yeah, so either way, I had gotten aware of it probably first time I ever really had heard of it was in August. And I want to say it was trading around like 7 or 8,000 a coin, or 6 or 5 or 6, something like that. And then it had a crazy run to like 18,000, I think is the top that it got to. And usually a big warning sign to be aware of is when everybody's talking about something, that's usually the time to sell it, not usually the time to buy it. So, you know, when you're getting in an Uber or you're getting a haircut and, you know, these people turn into financial advisors and tell you, man, I should be buying Bitcoin. That's usually the time to kind of hop out when the regular people are getting in. And I don't know if I wanted to be in an asset that, you know, was 18,000 a coin. And then, you know, we're talking about 4 months, 5 months later, a year later, had lost like 65% of its value or 70% of its value. You know, I just don't know if that's the smartest place for your money. If you guys are really serious about, you know, making money over the long haul, this is generally not the stuff I'm looking for. Something that has that kind of volatility. That's insanity.
Yeah, for sure.
But it is a good hedge against the dollar, I think. I think it's smart to own some. I will say that too.
The technology behind it is genius. I mean, the whole blockchain technology that it was used to create Bitcoin was amazing. It really was. And I think that technology itself will continue to be a big part of the market going forward, even if it's not Bitcoin. It could be a US government digital currency too. They might want to get their hands on this because at some point they're going to have to regulate it. They're going to have to do something about it because a lot of it is used for illegal transactions as well. And you want to be careful of that.
Totally. And the super duper, duper, duper wealthy can work together to buy and sell around the same time. And they can really, you know, dictate what the market does for that too. So because it's unregulated, they can do whatever the hell they want. Yeah, those are some scary things that need to be factored in my opinion.
So you're out for now.
I'm out for now, but that doesn't mean forever.
All right. And what are you doing? What are you doing with equities right now?
Yeah, I'm out of everything, man. I'm carrying pretty much all cash. I mean, I can show you just from I can show you a couple stocks that I'm kind of paying attention to and some things that I'm looking at if you want to see some big companies here.
Warren Buffett Jr. over here.
Yeah. Yeah, I don't know. I always keep stuff on my radar. A couple of you have been, I don't know, some of you on this call, some not, but some people have been wanting to, they've been reading about JCPenney. And so if you guys are paying attention to JCPenney, they filed bankruptcy on Friday evening, and their stock had bottomed at 14 cents. Okay, it went up to 30. So if you were a buyer at 14, you could have doubled your money at 30. But in that whole same day, they then filed bankruptcy, which dropped the stock from 30 back to 14. But it's a Chapter 11 bankruptcy, which means that they're not totally dead yet. They have one more shot at like making it. So if just for fun, I'm not telling any of you to invest in it, but just for fun, watch it, because last year this happened to Sears, and Sears went from like 12 cents to almost $3, which was an insane move. So I'm telling you, just for fun, watch JCPenney. Please don't, I'm not telling you put any of your money in it, but just for entertainment purposes, watch what happens. See if it can create a crazy run. But that's not something I'm watching. I was just a comment, because there's a lot of you that are paying attention to shit you see on Twitter, and like people that are trying to pump the stock to get it to rally. JCPenney will be fucking next year. So it's not an investment. It's going to be worthless.
JCPenney is dead. Neiman Marcus is dead.
Dead.
All of these retailers are gone. They're not coming back.
Totally. But if you read Twitter, you'll see stuff, because you got to be really careful with where you guys are getting your information, because some of you, like, been getting a ton of, since we started doing this, we're getting a ton of messages. Like, there's a reason JCPenney is fucking 14 cents. It's because it's done. It's dead. But if you go on Twitter, like, and I do for fun, just read what people post. Like, people are talking about, oh, Amazon's rumored to buy out JCPenney because they're going to use that those retail stores as warehouse space for storage. Like, which, okay, maybe, but, you know, you don't want to be buying something on a prayer. You know, that's like a desperate, you know, there's probably some dude sitting in his basement coming up with fabricated ideas of what's happening. Like, in theory, maybe that does happen, but the probability of that happening is very low. But that's what they do. A lot of those guys, they start to rally and create rumors and try to create excitement about stock that sends it up, which could get you believing. But there's a reason it trades at 14 cents. Like, JCPenney is dead. Like, all this stuff is dead. A lot of retail is dead. So, okay, let's look at, well, does anyone have any requests before I get into anything? Anything they've been tracking and they want to see? I can kind of break down a chart and show you what I see.
Hey, yeah, Brennan, I know I kind of been bothering you with that one genus. I don't know if you have a second to spare now.
Yeah. So stay away from that. It's all bullshit. The company has no money. On Friday, they did a vote with their board of directors. The stock, so for those of you that don't know, it rallied from like 19 cents and it went up to like $2 and something. They just voted to be able to dilute their stock and exercise warrants, which basically means that they're just going to dump a ton of shares into the marketplace at 21 cents. So anybody who's holding on to that or owns stock of that is going to get absolutely throttled. But it creates unbelievable opportunities to short, which is what I'm going to be doing on that stock Monday morning. So I'm going to be selling with the company, and I could probably make a quick 50% on a short trade. Yeah, if you guys understand short, so let me show you a short trade. So first of all, I need to define short. So let's talk about, obviously everyone knows buy low, sell high. We all good on that? You guys got the concept on how to make money that way? Okay, so there's another way to make money, which is going the opposite way. You can make money when the stock goes down. It's called selling short. And basically the idea is through your broker. So some of you have E-Trade, TD Ameritrade, Robinhood, Thinkorswim, you know, you have all these different platforms, right? You guys are all familiar with that. Selling short is doing the opposite. The broker gives you shares to sell, but contractually you have to buy the shares back. And ideally you want to do it at a lower price. So I probably just lost some of you. So let me show you what I mean.
You're essentially betting against the market.
Yep, or a particular stock. Yeah, exactly. So I'm going to share my screen. I'm going to do this on Paint, and I'm going to just walk you through how this works. So this is what selling short looks like. Okay, so let's say I don't own any stock. I don't have any. I haven't bought it. I haven't sold it. But I think that this company, and I'm going to show you the one that I traded, SAVA is the stock ticker, okay? So I'm going to stop sharing. SAVA is a company, biotech company, that was trying to create a drug to cure Alzheimer's, okay? I've been watching them like crazy because if that company had the cure, you're talking about something that would go to the moon. And you do see biotech stocks that come out with drugs that do really well, that absolutely take off. There was something I was in last year, AXSM, went from $9 to 110. Stuff, and it still trades up there. It still trades above $100. It's a totally valuable, legit ass company that created. Now I forget what drug it was, but they created a breakthrough drug that's gonna that changed the total disease for a whole group of people. So, anyways, this company SAVA was working on coming up with a cure for Alzheimer's. And as you guys know, Alzheimer's is a pretty awful, disease. But this company was pretty low on cash. They had like 20 million in the bank, which is considered to be low. They were only working on one drug, and the results for their trial of the drug came back, and it failed. Like their drug versus the placebo had no difference, which meant that what they were working on totally dropped dead, failed. Okay, well, in the last 6 months, that stock had gone from like $4 to like $9. But knowing that information, it went from 4 to 9, and knowing what you know, they had one drug and it failed. Is it pretty safe to say that that stock was going to drop? Would you guys all agree that there's no doubt in anybody's mind the price of the stock is going down? Okay, so when I see these, when I see these kinds of when I see this kind of news, when I see these kinds of things come up, my mind wants to sell short. I'm going to teach you kind of how that works. So I'm going to go back to sharing. So SAVA, and I'm just going to show you a how exactly this works. So let me show you. Okay, so we're going to make this just really easy, but I'll just say the stock was worth $5. Okay, when you sell short, you're allowed to sell shares into the market that you do not own, but you contractually have to buy them back. So your broker will loan you the shares. So let's say at $5, I sold, let's say 100 shares into the market. So let's say my account started with $0. So to start the day, my account had nothing. So hopefully you're all following me so far. Right now I have no money, but my broker loans me 100 shares, which I sell into the marketplace at $5, which means that my account now went from $0 to now I have $500. Okay. Now contractually, I have to buy the 100 shares back because I sold them, and I only had these shares to sell because they were loaned to me. My broker, E-Trade, gave me these 100 shares and said, hey, if you want to sell them, you can. So I said, hell yeah, I'm going to sell it at $5. My account had no dollars in it. Now I have 500 because I sold 100 shares at $5, which means now I have $500 in my trading account. However, because I did not own, contractually, I have to buy them back. Well, let's say this news was so bad that it dropped the stock from $5 to, let's say, $1. So it went from 5, and now it crashed all the way to 1. I decide at $1, I'm going to buy the 100 shares back that I have to buy back. So I buy 100 shares, which costs me $100 to do that. So minus 100, because I had to buy 100 shares at $1, cost me 100. But I had 500 from selling short up here, which means that my profit for the day on that trade was how much?
400.
Made 400 bucks out of nothing. I had $0 and I turned it into 400 because my broker allowed me to sell 100 shares at 5. So I had now I have $500, and then I had to buy back the 100 shares at $1, which cost me 100. So $500 minus the 100 means that I had a $400 winner. Does everybody understand that concept?
Are there people that do exactly what you just showed us more so than they do the buying low and selling high?
Yeah, hedge fund managers.
Yeah, and honestly, some of the most wealthy people that I follow, that's all they do is they just short. They short. But the really smart guys short the stuff that you guys are getting excited about, like those penny stocks that run from 20 cents to $3. Some of the most successful traders that I know just short those companies because they're worthless companies to begin with, and a bunch of people just rallied the stock on a bunch of rumors and BS, and then they short the shit out of those stocks once they run, and then just make an absolute killing. So anyways, let me show you SAVA so you guys can see what actually happened to them. Let me go share. So I believe they were trading at $8 before all this happened. I'll put this right here. So I'm just gonna do the 2-day chart. So this is gonna show you Thursday's price and then Friday, and I'll do the candlesticks, 5 minutes. So you can see what happened. Their stock was at 8, and that news came out, and it went all the way down to $1.75. Crazy.
So if you bought in at the 8 and you put $100 a share, you could have made $700.
Yeah, exactly. Yep. Good math.
Did you see the short that Bill Ackman made?
No,
Oh my God, I'll include it in the chat. He made $2 billion off shorting the credit market. It's crazy.
Unbelievable. Unbelievable. Any
Is there like
questions
a
on
time?
that? Yeah, go ahead, Isaiah.
Is there like a time frame where you have to buy it back? Because I know you said you have to buy the shares back. Is there like a time frame or something?
Okay, so there is only if the stock goes above. So let's say you're wrong, like you short sell at, let's say, $8. Now in this scenario, there was no way that shit was going up. But let's say there's stuff that's out there that you think is going to go down, and you short at 8 and it goes to 18. You would get what's called a margin call, where you actually would lose more than what you put into it. You can lose over 100% shorting, which is the dangerous part of shorting. Because when you buy something, right, if you buy it at $1, let's say you buy something at $1 and it goes to 0, the most you can lose was your initial investment. But when you sell short, if you shorted it at 8 and then it went to $30, you would lose like almost 300% of what you put in, which means what you put in, you would actually have to go get more money to break even, or not to break even, but to pay your broker back, because your broker is taking the loss because they're the ones that loaned you those shares.
Makes
Shorting
sense.
shorting is really dangerous if you don't know what you're doing. And you can get fleeced. Like you can lose a ton of money, more than you
For
have.
example, if you shorted the stock market before the coronavirus, you would have done very well.
Very well. Yeah. Which, I mean, might have been a smart move regardless of the coronavirus to begin with, because our market was, we were hitting new highs every day. So I think fundamentally the market needed a reset. I think the coronavirus was just the catalyst. I don't think it was there was a lot of things that were happening in the economy that needed a reset anyways. I don't think the coronavirus was the main reason. I just think it was the catalyst that, caused everything to happen. But yeah, to your point, 100%. If you would have shorted the market as soon as that coronavirus, the market started to go down, you would have made an absolute killing. Absolute killing. Anything else?
So you're sold out of all your equities right now?
Everything. Yeah, I'm all cash, which isn't smart, and I know that. I'm not sold on what direction the markets are going just yet. And until I have me personally, just until there's a really clear direction of where we're going, then I'll start to make some moves. But who's to say that gold still has value too? You know what I mean? Like, what if this is the digital age and gold is so, who knows? I mean, that might be what happens, and you put a lot of money in gold and then it's Bitcoin that goes. Or it could be the opposite. You put all your money into Bitcoin and it's like, oh wait, gold has been around and been the backbone for, So I think the answer is doing a blend of all of those things. But what are you looking at or paying attention to?
Well, I want to continue to add to my positions. If the market does go down, keep buying the low and readjusting. I don't think we're going to retest the lows, though. I really don't. I'd like to hear your opinion on it personally, because with $10 trillion in the markets, how are we going to retest the lows?
Yeah, there's no way. It's like, I think fundamentally we should, based on the shit that's happening. But with, like you said, with that much money being pumped into the economy, it probably won't happen. Even though I think I think it should, because I think what we're doing is, I get why we're doing it, but from a economic standpoint, should cause new lows. But it's obviously doing it. That's why they call it quantitative easing, because we're easing the fucking the drop that should be happening.
Right.
So it's smart. I mean, I get why they're doing it short term. I just think long term we should retest the lows fundamentally, but I don't think we will because, like you said, there's $10 trillion that just got pumped into the economy. It's keeping everything inflated, keeping everything up.
Yeah, these valuations are way past earnings at this point.
Now they are. And it'll be interesting this week. Last week, a lot of companies are reporting their earnings right now. And it's ugly and it's getting uglier, but the markets are always forward looking. And so for them to keep going up is just, it's really hard for me to watch where it's like, oh, another 5 or 10 million people filed unemployment. And then the market rallies on those numbers. I'm like, what? Like, that doesn't make any sense. But yeah,
No.
I don't know. It seems like more bad news brings more highs right now. It's weird.
Yeah, we're living in historic times, to be sure.
It's doing opposite of what you would think it would do. Which is weird because the idea of a market is that it's free and it's whatever the general consensus of what people believe. Generally, this is what happens to the marketplace because it's a place where people buy and sell. What's odd is there's so many people that are bearish, and just everything I read is bearish, yet the market keeps going up, which is odd. The only thing that I can think of, Vinny, that I think might be what we're seeing is if it's not the quantitative easing and if it's not the $10 trillion being pumped into the economy, it could be that so many people are educated on selling short. And when you sell short, you have to buy back and cover those positions. And so that's creating levels of support because you sit and you have to buy back those shares, which prevents the panic from the market really crashing because all those big guys that are shorting, they're shorting on top of each other. And when one guy wants to cover, another guy wants to short, and it causing a squeeze in the market, which is pushing the price higher. That's the only thing I can think of. And I think people learned their lesson from 2008. There weren't a lot of people shorting the market or short selling back then. And I think everybody is thinking and wanting the same thing, which is causing the market to actually squeeze up. Could be what we're seeing as well.
That's an interesting take. And do you think it's going to affect the real estate market as well?
It should. It hasn't yet. But we're taking it so easy on people. You know, there's so much forgiveness and there's so much, what's the word I'm looking for? My gosh, blanking on the word. But we're being soft on people that got in.
Forbearance.
Forbearance, there you go. Yeah, exactly. We're just being really soft on the folks that should be getting hammered and slaughtered because too many people live their life on credit, guys. And the problem is that everybody knows that. And so to prevent even more damage to the economy, we're taking it easy on the people that are living their life on credit, which frustrates me because that shouldn't be how it is. Those people should be getting owned, and they did. Those people got owned in 2008, but we saw how bad 2008 was for the economy, and I think everyone's trying to avoid that. So we're taking it easy on the folks that are over leveraged in just what they own in their assets. But so I don't think it will happen. I don't think
the question is, when do the banks start to get affected, right? Because as you
at some
said,
point they have to. Yeah.
Right. They're not bringing money in. People aren't paying their bills.
Yeah.
So they're going to get hit really hard.
Yeah. And with negative interest rates, how the fuck are these guys going to make any money?
And that's why their stock is so down.
Yeah. Yeah. It's crazy. The banks are healthy, but I don't know for how long.
Any news from your dad at US Bank?
No, I mean, he's been talking to me a lot about those PPP. We were having a lot of discussions around that. Do you guys know the PPP? Those are the small business loans that they gave out. You guys familiar? One of the things, I don't know if you paid attention to, Vinny, but they're proposing is extending the payroll program from 8 weeks to 24 weeks for those small businesses. That got proposed. I don't know if that's gaining any momentum right now, but that would be massively important. In my opinion, I think that's necessary, but we'll see if that happens or not. But no, my dad hasn't really given me much. And he says his bank is totally good, but they were good in 2008. They returned the money right away that they got from the bailout. He works for US Bank, and they were good the last time.
Yeah, the PPP program is the best part of the legislation. Everything else is just a giveaway. I mean, obviously, it makes more sense to have employers continue to take care of their employees than getting everybody on the unemployment system. And that's why Florida's had such a big problem. Because you got 20 million people living in this state. And think about
Yeah.
all the people that are unemployed calling the unemployment system. It's just too much. Luckily, we're going to start opening up this week, and I'm looking forward to that. But I know in a lot of parts of the country, they're not opening up yet. In Los Angeles, for example, the mayor said that we're not opening up until there's a cure. A cure? We don't even know if there's going to be a cure. That's ridiculous.
Yeah.
Where do these guys
Crazy.
come up with this?
Yeah, man, it's absolutely bananas. And the scary part is even though we're going up against like a super high unemployment rate, you guys would think that in theory, we should be able to hire whoever the hell we want. But one of the things that I don't think I've even really taken into consideration, that I think we all need to take into consideration, is what we're going to be competing against is unemployment pay. Like they're making it so easy, and they're making it so lucrative to fucking be a bum, that we might actually be competing against that when it comes to hiring. Now, there's obviously two sides of the coin there, and part of me actually kind of likes that, because anybody that doesn't want to work with me because they'd rather make money and not do shit and sit on their fucking ass and be a bum, I'm not even so sure I'd want to hire in the first place. So it actually may weed out some of the retards, which is kind of cool. But it may not be like raining new hires. Like, I mean, it's going to be way better than before. Don't get me wrong, but it just may not be like a line out the door, people wanting to work with us, because we will have to compete against unemployment if they keep making it so lucrative to do so. It's bananas.
Well, think about it. The Fed is giving you $600 a week on top of what the state's giving you. So if the state's giving you $250, that's $850 a week. That's not bad. A lot of people don't make that much every week.
How long does that last, though?
The Democrats want to extend it until January. Right now, it expires in July.
That's crazy.
Crazy. I mean, when you think about this, the average American makes $32,000 a year. So there's people that literally by not working right now got a raise. It's crazy.
Who's paying for it?
Yeah, I got it.
Go ahead, Steve. You're good.
No, it was just small talk. Just saying, I got a neighbor that got laid off and said himself he's not rushing to get back to work. He's getting like $850, $875 a week. And I was looking at him like, wow, like, all right. God bless you, brother.
And then on top of that, they're getting the stimulus checks, right?
Yeah.
That was a one-time check. They want to do another one of those too.
That's going to pass, all right?
There will be another stimulus bill, but it's not going to be to what she proposed in the House. It's going to be much smaller than that. It's really going to be focused on taking care of employers, so they're not going to get sued by people for going back to work if they get sick, which is important, because if people are going to go back to work, there needs to be some legal protection for those employees.
Yeah, I mean, legitimately, some of the people that I told to get unemployment probably don't want me to hire them back, because if I hired them back, they would be making less with us than they would be if they were collecting their unemployment check. I mean, that's like, think about how fucked up that is. Like, I mean, good for you, I guess. You're making more money, so I get the employee perspective, but I mean, that's just unemployment shouldn't be enough money to where you can just live your life with no problem at all and get by. It should make you uncomfortable and want to work. And it's so much money that, like, I think people are just like totally chill. They're just like, oh, this is great. You know?
Yeah, and they say Uncle Sam's going to take care of me, you know?
Yeah.
But the funny part about it is we are Uncle Sam. We're the ones that are going to be paying that off for the rest of our lives. They're going to have to raise taxes to pay for this stuff eventually.
Yeah. It's going to come full circle. It has to. Yeah. Yeah, I know. But hey, don't tell that to a 19-year-old that has it all figured out, right?
That's funny. Is that the extension to January in the new bill that's coming up?
Well, with our system, the House passes a bill, then the Senate has to pass it, and then the president has to sign it, right? So the House just passed it, which is led by Democrats. The Senate is controlled by Republicans, and they're not going to go for that. So there's going to have to be some negotiations, and they're going to have to meet in the middle somehow. I really don't see the Republicans wanting to extend unemployment benefits until January. So no, I doubt that's going to be in the next bill.
I saw something online that said it's dead on arrival, which is funny.
Exactly. Yeah.
Yeah.
So Brennan,
Socialism. Yeah.
your advice, I guess, to everyone would be just kind of save your money right now instead of focusing so much on where to invest, just because of like how tricky things are right now?
Yeah, I mean, I think there's some things that, no matter what, like if you're willing to park your money and just let it sit there for a while, there's some things you can't go wrong with, I think. I'm in a position where I want to make sure I can maximize. I'm just dealing with more capital. And for me, like my decision making is just really like, I mean, I'm just putting more thought and more pressure into it because I want to maximize my return the best that I can. But, when you're playing, so like, let me give you the best way I can kind of give an analogy here. If you put in $1,000, like you were going to invest $1,000 and you get 8% return, how much money would you get? Anyone who can do that? If you get an 8%,
80.
$80, good. If you get a 20% return, how much would you get?
200.
200, right? So at the end of a year, you have, $1,080 or you have $1,200, that's okay. I guess that makes a little bit of a difference, but that's not a massive difference. Like when I'm putting in $500,000, the difference between an 8% return and a 20% return is we're talking about a lot of money. So that's, I guess, kind of the point I'm trying to make is that if you're playing with smaller amounts of money, I think you're perfectly fine with putting it into stuff that we know is going to go up. And I could probably do the same. I want to try to get an edge, and I want to see clear trends start to like kind of buck their head, and then kind of hammer in with some bigger positions and try to maximize my return. That's kind of how I'm trying to do it. But I'm a little bit more of a gambler.
Did you lose money this week?
No, I haven't lost money in the market since December.
Oh.
Like I have days that I lose, but I don't have weeks that I lose. I'm green every week for the most part.
Yeah, that's why I'm really going to take into consideration what you said about really learning the trends and seeing all those things for an entire year at least before even like jumping into something like that, especially if I don't have the capital. So yeah I'm 100% going to take that advice that you said.
Yeah, and I mean, what I would do, especially with our business, what's cool about our business for you guys is you don't need to put all your time and energy into it. I mean, obviously right now you can because we all have a lot of free time and, go for it. You want to learn and spend some time with it, I'm cool with it. But like when we get back to work, like remember, we're off on Tuesdays and Wednesdays. The markets are open on those days, and that's a good time to just like check in and keep a pulse. Obviously during the week you can kind of glance at it, but if you really wanted to like study, learn up, and like watch stuff happen, Tuesday and Wednesdays are great days to really kind of watch that. All right, cool.
Hey, Brennan, how often do you use Fibonacci like extensions and retracements while trading? I've been looking into that and trying to learn how to use that.
Oh yeah, those are cool. I typically only use Fibonacci's. Some of you are like, what the fuck is he talking about? On breakouts, like a big breakout. And if I can't clearly define where a level of support is to try to get an entry. So if the chart, like for instance, if we're in like a blue sky breakout, meaning that like there's no support levels when I'm looking left on the chart, I'm like, fuck, I have no idea where this is going to stop. Fibonacci is really good, and using those fib levels can give you an idea of where the price will turn around. So entering in at one of the fib levels is not a bad idea if you're playing something that just really broke out. Of course, you can use fibs, not just on daily, not just on a day trade. You can use it on the daily trades, but I typically only use it when something breaks out, and it's a day trade for that day. I'll use Fibonacci levels, but they're powerful. They do work. Fib levels, I would look up simple moving averages, identifying support, resistance, wedges, flags, channels, doji or candlestick patterns. Those are all the things that I would be studying. Those are all study material.
Hey, Brennan, can I see you go through one stock real quick?
Sure, which one?
Beyond Meat.
BYND?
BYND, correct.
Yep. Cool.
Yeah, they're saying that's going to go up to like 180, right?
Yeah, this one is so this one's interesting because we're actually in a meat shortage right now. I don't know if anyone's paid attention to that. Has anyone seen that?
I've noticed.
Oh yeah.
Yeah, they cut out some of the meat manufacturers. They cut some of their jobs because of the COVID.
Yeah. So there's a thought process, and not only that, I mean, obviously that's a catalyst, but not only that, you know, there's obviously a trend towards healthier eating and people going, you know, vegetarian, vegan, or just eating less meat in general. So Beyond Meat is an interesting one. They've only been trading for about a year. Let me see, maybe
I
2
mean,
years.
hell, even fast food restaurants are saying, you know, meatless burgers and shit. So yeah, absolutely.
Yeah, yeah,
Yeah, Wendy's is not even selling hamburgers.
yeah, crazy.
What?
I tried to get a Dave single. They ain't have none.
That's crazy.
All right, so am I sharing screen? You guys can see me? We're good?
Yeah.
Okay. So I'm going to point out something right here. So understanding patterns is really important, so you know how to save yourself a lot of money. We're going to look at just this real quick. I want to show you this. This is really important. All right, so if you guys are studying or want to learn more, this is pretty textbook. See this whole thing right here? This is called a head and shoulders pattern. So if you look right here, we have think of it like a man or a human. You have a left shoulder that formed right here. You have a head that formed right here, and then you have a right shoulder. This is a really bad sign if you're trying to buy low and sell high. You want to not buy in anywhere in the head and shoulders pattern. And I mean, this is almost a perfect one. You can see it right here. I mean, that's just very clearly a head and shoulders pattern. So see how I was able to clearly identify there's some resistance here. Here's the support. Here's a shoulder. Here's a head. Here's a shoulder. This was all bad, which is why this took a while to recover. Anyways, not surprisingly though, when this kind of traded down, it consolidated right in here. It looked like the selling pressure was over. I think ideally this would have been your entry. After seeing this for, gosh, I mean, that traded sideways for 4 months. And the selling pressure really kind of had stopped. It's probably a good opportunity to get in. If you were trying to look at the flag that's set up here, there was a bear flag that you can pretty clearly see. And so you would have wanted to been a buyer on the breakout of that negative bear flag. See the flag? So that breakout right there would have been a pretty safe spot to buy. And then not surprisingly, the bottom of the shoulders was the resistance. See, once, twice, tried a third time, couldn't break through. And then coronavirus hit, which is what I'm guessing this is. Yep, which tanked the stock. A lot of really good buying levels down here. This was a good opportunity to buy. You have a nice W bottom that formed. Look at that. That's beautiful. Nice little W. Boom. You would have wanted to be a buyer on the top part of this W breakout right in here. And then we're in an interesting level. This level is actually, we're right at a support level. So we'll see if this is a real breakout or a fake breakout because we broke through, but it hasn't bounced on this line like I'd like to see. I'd like to see it bounce. If it can hold this level, which I would say, if BYND can hold 130, that number is the line in the sand for me. If it can hold 130, well, you'll easily get 180. Easily. Give it a few weeks, you'll get up to 180. But I think that's a really safe spot to invest, would be at the 130 level. And then my trigger to sell would be at 126, 127. So you're risking here $3. If you bought in at 130, you're risking $3 to the downside for a potential $50 upside. Those are the kinds of trades I like to get into. And then over that one, if we can get over that one, what level was that? That 180 level, that would be bananas. You could get a really big move there. But that's kind of how I see it.
Yeah, that's definitely an interesting stock with what's going on with all the meat shortages and everything. I could see that going up for sure.
For sure. And just the overall trend of healthier eating, in addition to that, you know, certainly looks like a good outlook for that company.
What do you think happened with Mark? Remember you were telling us about Mark last week, or sorry, 2 weeks ago?
Yeah. So Mark might actually be a legitimate company. And I'm so annoyed actually I said this because I'm teaching you guys all the wrong thing. Most companies that trade under $1 99.9% of them are absolutely awful that have no legitimate value. Mark might actually have a contract with the Vegas hotels, which could actually create value. We'll find out on the 27th. They report earnings and they're going to update shareholders on what's going on. I would be totally out of that until the 27th. If they announce that they have really big contracts, which I've actually been doing some due diligence and digging in. Disney has them as a partner right now that was on their like website. If you go on Disney.com and you dig through like who their partners are, that company, it's called Remark Holdings, is listed as one of their partner companies, which is really interesting because their technology could be used when you enter theme parks across the world, which could actually make Mark pretty fucking valuable. So if I nailed this one, you guys are going to think I'm just really quite the guru. But most of these companies that are trading at those levels are absolutely crap. They're totally worthless. And any hype you see or anything you read on the internet is likely complete and utter BS. This one, though, I'm saying might, and I'm saying that with a grain of salt, might have something of real value. And if it does, it could be a $10 stock, $5 to $10 stock. I'm just not banking on it. I need to see the proof before I'm going to put big money into it. It's fun to trade, to buy, sell. If you know how to, clearly identify trends, you can trade it. This is nothing that I would tell you guys, yeah, hey, throw your money in and, check it in a few months. Because you throw it in now at $1.30 and 3 months from now, it's worth 20 cents. You're going to hate me.
Yeah.
Yeah. But yeah, I mean, it did what I said it would. If you paid attention to the charting, it did exactly what I said it would.
Yep, you were right. And then it crashed.
And then it crashed, yeah. Which is why you want to, if you can identify what I identified, as soon as it runs high, you sell and you take your profit and you run for the hills and you don't ever look back, which is exactly how I traded it. Because it always comes back down. That stuff.
I missed out. Yeah. I'm holding now. I missed out. So.
Okay. All right. Someone hopped off mute there for a second.
Hey, yeah. So on the 27th, is that your proof you were speaking of?
Yeah, I mean the company's going to announce their earnings and they're going to update shareholders. The company has yet to come out and say we have contracts with this company, and this company. It's all rumors, but if you go on some of these big companies' websites, they do have Mark listed as a company that's a partner company for them. Like the Wynn has it, Disney has it. So if you're doing the math, it does seem like there's some contracts and there's something going on that, might actually prove out to be of value. But the company got to come out and say it. If they don't come out and say it, it's not real. It's all rumors. It's all fake.
Just curious, what's your percentage on that? That is real.
What? On Mark?
Yeah.
Oh, I don't own anything. I sold it all.
Oh, no, I mean, like, what do you think is the percentage that it might actually get to 10 someday?
Oh, what's the percent chance? If what they say is true, and if they come out and they have contracts with all those big companies, it would get there and it would get to $10 in 3 weeks. Easily. And I've seen several companies over the course of my career do that prove out to be legitimate, real companies. Just for every really awesome, great company that trades under $1 that's available, there's 999 ones that are completely worthless, that are total scams. Like for instance, if you guys want to look up a ticker to see what a scam looks like, look up WORX. It went from, in one day, it went from $1 to $15 because they announced that they had $700 million in sales for coronavirus test kits, and it was a lie. They got shut down by the SEC, and anybody who bought in literally lost every dollar they put in. So just be aware, there's shit like that out there.
So what do you think about Lowe's and Home Depot?
I think those are good companies.
They're reporting earnings this week. What do you think?
If I had to guess, only because So with these kind of companies, do yourself like go to a Home Depot during the coronavirus to get a feel on what you think. That's what I do.
Yeah, I've been
There's a
to
lot of
both.
traffic in it.
There is.
They're doing amazing.
Yeah, super
They
packed.
are.
Yeah. And why is that not a surprise?
Because people are home.
Yeah. And they're looking at their fucking fucked up sink, and they're looking at their hole in the wall, and they're looking at all this shit, and they're like, damn, I gotta fix this stuff. And then where are they going? Home Depot,
Home
Lowe's.
Depot, Lowe's.
Yeah, you know it. So that actually would not be a bad idea to buy.
Yeah, I've been holding Lowe's for a little minute, so
Yeah,
see.
yeah, I think you're safe. I don't think that's not in any danger. That's not on my radar as being dangerous.
Yeah. And Walmart, I'm kind of still skeptical because they had some drama last year, selling some of their Sam's Club stores. So I don't know. I don't know how their cash flows go. You know, if they're like cash solid, or if they're, you know,
Yeah,
falling on credit.
the long-term outlook for Walmart, in my opinion, is really dependent on if they can take some market share from e-commerce, their e-commerce from Amazon. If they can start to compete, because right now when I say buy something online, what's your first thought?
Amazon.
Amazon, which is like 95% of the people that walk the face of the earth right now. If somehow Walmart can turn that into like a 70-30 kind of thought process where like I go up to 10 people and go, hey, you need to buy something online, where do you go? If 3 out of 10 people can tell me Walmart, then I think that's a really good sign for Walmart long term. I think that's the space they need to compete in. I think their retail business will do just fine long term, but businesses need to adapt or die. And I think they need to figure out a way to compete with Amazon. They certainly have the locations nationwide to be able to compete in the shipping and logistics business. And I think they can do it. It's just going to take them to execute really well to make that happen.
Yeah, I mean, I think they still have a really good cost. What am I thinking? Like how they do their cost versus like revenues kind of thing, how they cost their products and stuff. They have a really good program going, but people are just relying more on Amazon. So
That could all change, of course, if we take the supply chain back from China.
yeah.
Yeah, wouldn't that be something?
Yeah.
That'd be amazing. But the prices of products would go up.
Yeah. Huh.
What do you make of what's going on with China, Brennan?
In what sense?
With COVID-19, how they kind of shut down dissent. They didn't allow a lot of people to report about it. As you know, they allowed people to travel outside of their country. However, they weren't able to travel within their country, which expanded the virus across the world. Yeah, what do you think about that?
Yeah, I think there's good evidence that's mounting that the virus was created in a lab. And I mean, this is just, I don't know, I'm not trying to be a conspiracy theorist, but if you really dig in and look at like the information that's out there, I think this whole story of like it came from like a marketplace and somebody ate a bat or something, I think is totally hokey. And I mean, we know all this shit about how much China's lied already. Like why would you believe that? You know what I mean? I think they were massively irresponsible with their decision making. And it kind of goes to like, yeah, okay, they should be held accountable, but how do you what do you do to hold a country accountable? Like, I don't know.
Tariffs, sanction them.
Something.
It's going to be something, trade disputes. Yeah.
Something, but it's going to need, I think it's going to need to take a united front of countries that are all in alignment with that, because I think if only a few countries feel that way and a couple other don't feel a certain way, I mean, that could be big fireworks, and that could turn into something really ugly fast. But I think we do rely a lot on China. I think we rely too much on China, if I had to be quite honest with you. And I think we're severely in debt to them as well. And I don't know. I think that we need to look other places in terms of just our economy and what we do. I think we need to find other economies to really invest in and other countries to really invest in. But yeah, I'm not a fan of anything China.
Yeah, me either. I mean, the problem is since they were entered into the World Trade Organization in 2001, we've kind of used free trade with them, but they're a communist mercantilist power.
Yeah.
And our companies basically use their slave labor, right?
Yeah.
Which, you know, benefits us in lower prices for products. On the other hand, it hurts the American worker, right? Because we used to be the manufacturing capital of the world, and now China is. And that's not just with the US, it's with other Western nations as well, across the European Union, Australia, all across the world. So
Yeah.
I think this issue has really exacerbated that and shown that why do 95% of our drugs, essential drugs, get manufactured in China?
In
Why is
China.
that?
I know. It's crazy. And what was really crazy is when they got shut down, there was a huge worry here that we weren't going to have the drugs that people depended on to live their life, because like you said, the supply chain was totally dependent on them. That's really,
Exactly.
I mean, that's fucked up.
And what
Really
did they
is.
do? They bought all of the PPE.
Yeah. Yeah.
They took it all, so the United States wasn't able to get any, and then they sold it at a higher price. They're very smart people, don't get me wrong, but they've taken advantage of the United States economy for a long time.
They have. Yeah, it's been quite remarkable to see.
And it impacts the markets big time.
Mm-hmm. Oh, yeah. Yeah, there's no doubt about it. No doubt about it.
We've outsourced our manufacturers for a while, because even our American-made cars aren't made in America. You know, they're manufactured in Mexico and stuff like that. So that's something we've been doing for a while.
Yeah, the US is primarily a service economy, right? What do? We work in sales. That's a service, right? Food industry, it's all sales. We don't build anything in this country anymore, and it's really a shame.
Yeah. Yeah, it's so true. So true. Very few.
I mean, Elon Musk is one of the last auto producers in California. He said it himself, right?
Yeah. And he told, what's the California governor, Newsom?
Yeah.
Basically told him to go fuck himself, and he brought all of his people back to work, and he said, "You want to come in? You're going to arrest anybody? Come arrest me. You know where to find me. I'll be on the factory floor building cars."
I love it.
Dude, he's awesome.
No, he said, look, if that's the way you're going to treat one of your great companies, we'll move to Texas.
Yeah.
We'll move to a state where we're appreciated in a tax-friendly environment, right? And there's a lot of growth there.
Yeah. Basically told the state of California, all that revenue we're making you, we're going to say, see ya. Give it somewhere else. Yep. And he should. I mean, he should, 100%.
Some of the colleges in like Florida wrote Elon Musk a letter saying, "Hey, you could come build over here." Like people are offering, like, please come build.
Yeah, I don't doubt it. I don't doubt it at all. Interesting side note. I was talking to my dad today. One of my dad's clients is a real estate investment company. And my dad asked them, like, hey, what are the up and coming like real estate markets? Where are the places that you guys are really purchasing and thinking that, real estate value is going to grow in the next 5 or 10 years? And the first place they said was South Florida. They said a lot of their real estate purchases are in South Florida right now. There, and then ironically, number 2 on that list was Vegas. But
yeah, a lot of people are moving here.
Yeah,
from New York, California, high tax states.
Yeah, and I mean, I could see the California to Florida move. Obviously, I've done it, and you get a lot of the similarities of California, but at a fraction of the cost. I mean, you really do get a lot of, just the cost of living in general here is much lower. I mean, tank of gas right now is $1.70. I asked my dad, I'm like, how much is gas over there right now? And they're still paying $2.90 just for gas. I mean, just things like that in California in general is just more expensive. Crazy.
Yeah, this situation is only exacerbating that.
Oh yeah, no doubt, no doubt. And I think a lot of people are going to get fed up with it too, especially if California pulls the shit they're talking about with, hey, we're not letting anybody do anything until there's a cure. Meanwhile, half the country is out working. I think there's going to be a lot of people that are going to give the finger to California and leave.
Do you think Sebastian's office will be one of the last ones open?
It's possible, yeah. Yeah, I think it's possible. It'll be really interesting to see how he plays that if that happens. If I had to guess, I think he would send all of his reps on road trips. Like, that would be my guess. Like, he would just have everybody go to another state and, work. That would be my guess, but I don't know that. That's just me guessing.
Well, it's interesting. There was a election, actually, a special election the other day, and a Republican won in Los Angeles.
Huh, go figure. Maybe the tides are turning. Hasn't happened in 60 years, maybe more.
Well, a lot of Californians are protesting in Huntington Beach, Newport Beach, right? That's your area.
Yeah,
You know all
yeah.
about that.
Yeah. Orange County is super Republican, but that's about the only county in the state that's that way. Virtually every other county is very, very blue.
Yeah, the more north you get, right?
Yeah. I mean, it's pretty rare to see a Republican win in California for anything. You know, I think the last Republican that won in California, correct me if I'm wrong, I believe was Schwarzenegger for governor. I think he was a Republican.
The Terminator.
The Terminator. Yeah, and that was an interesting time. And then before that, the only other one I can think of was maybe Reagan. But I know he wasn't governor, but he was a California guy, and I believe he was.
He was governor.
Was he governor, and then he became president, right? It's before my time, but yeah. So interesting, but yeah, California traditionally is very, very, very left. Which I mean, I can appreciate, but to an extent. But when it gets this out of control, I'm like, I just want to smack them.
Well, at least we live in Florida where there's no state income tax.
God bless it. God bless it.
How much do you pay in state income tax in California?
With the amount of money I make, I would have paid. I think their income bracket. Last I checked, I think is 7 or 8%. Let me look that up real quick. California state income tax. Let me see what the current rate is. Oh, never mind. It's 12%.
Holy crap!
So I would have paid an extra $70,000 in taxes for living in California. That in Florida I get to keep. That's
maintain
great.
maintain that $35,000 lifestyle, huh?
That's it, man. And then go take that 70 grand that Florida's giving me and put that money to work, baby. Whereas in California, I'd just be paying for more homeless people to live out on the streets and take shits.
And that's something you took into consideration, right, when you were launching out, right, Brendan?
Yeah, I mean, exactly. And that's why some of you guys, like when you open up your business, like I'm telling you, you want to go where the best environment is, business environment. You don't want to go to the coolest place to live. And so many people fucking get that wrong. Like I'm from California and I can't imagine running my business in California, just financially. I would be making so much less money there. I mean, take everything the same people, same sales, same everything. And we probably would cut my profitability would probably be 30% less than it is now. Which, I mean, 30%, you're like, oh, that doesn't sound like a lot of money. On $1 million, that's $300,000. I mean, that's when you start to make big money, you're talking about lots of a huge chunk of change. So yeah, no, I 100% think you want to go somewhere that's business friendly. It's one of the reasons why I'm so like pumped that Fergie might go to, you know, as long as this all plays out the right way, Baton Rouge in that area. I mean, you're talking about low cost of living, talking about, you know, really tax friendly state, place to run a business. I mean, that's the formula you're looking for.
Yeah, literally like doing all the market research is literally the perfect market.
Oh yeah, totally. I mean, the only thing that would make that market better would be more population. Yeah, but whatever. You know, I mean, who cares? Every market's going to have its pros. Every market's going to have its cons. The downside to markets that have high population is usually that means higher cost of living. So it's really rare to get that formula of high population and low cost of living. It's just, there's not many examples of that.
I'll tell you what, though, they're coming off a national championship, and there's going to be so much excitement for SEC football. I mean, if we don't have football, this country is going to go crazy. You know,
I agree.
I mean, think about it. Tom Brady's going to be playing for the Bucs. It's going to be an amazing season in the NFL. Even if there's no fans, we need to have sports.
Agreed.
Soccer just started up again in Germany, so I had some soccer this morning.
Well, that's exciting.
The Bundesliga was so crazy. After they score a goal, they celebrate, you know, trying to show off with the fans. And it was like, wait a second, there's no fans.
No, and they don't even – usually, you know, they all jump over each other, like all over each other. They're all like 6 feet apart. They just kind of like –
So I think this – I mean, we'll end the call soon, but this is I think these are going to be my tickets this year. I'm gonna go club level right here in the corner in the shade. Dolphins are right over here. They come out of the tunnel right here. Good view of the whole field. Watch plays unfold. I'm thinking about these seats, but we'll
If
see.
you're able to go.
Yeah, if they even play games. Or maybe I have to sit 6 feet away from the next fan.
Ticket prices will go up.
Yeah, they would. Maybe got to get them now. We'll see.
Hey, I got one more for you, Brennan.
Yeah, go for it.
Have you seen the claim to cure the antiviral from Sorrento Therapeutics?
What's their ticker? SRNE.
Yeah,
Don't buy it. Don't buy the hype.
appreciate you.
Yep. They're like the 19th company that had the cure for the coronavirus. Everybody's got it. Yeah. You're just new to the game. It's all good.
What other medical stocks are you looking at? Are you still looking at mRNA?
Yeah. Well, I played mRNA a few weeks back when they hit their all-time highs. To me, mRNA is so overvalued. It's ridiculous. There's still people that want to see it go higher. Problem is there's so many short sellers in it that every time it starts to drop, these guys that have sized in big short positions cover, and it pushes the stock back up again, and it doesn't let it actually come back down to earth. A lot of people don't have patience, but yeah, I mean, been a beautiful thing if you've been in it in a long position. Let me see if I can pull it up here for you. Yeah, this is just bananas. They got a big government grant, which is what I bought in on when it was around like 44, and I sold it up at 50. I think that was actually right here. Yeah. Yep, that was this move. Is that about? Yeah, let me see. Let me go back. Hold on. 14 days. Yeah, that was the move right here. Boom. But it hasn't looked back since. And believe it or not, Vinny, based on what I'm seeing here, I mean, this looks like it's going to retest the highs again. I think once, twice, 3, 4. If it can't get above 68 or 68 bucks, 69 bucks, that would be a failed breakout because you have this big bull flag. And if it can't break through in a really big way, then I think it'll sell off. But if it can break through that flag that was setting up right there, I mean, that was a $12 flagpole, which means that it could go up another 12 bucks from the 68 level to $80, $83. I mean, I don't know. I've seen shit during the coronavirus that I've said, there's no way it does this, and it does it. You know, it can't keep going up, or it can't keep going down, and it keeps going up, or it keeps going down. So there's been a lot of liquidity in the markets. It's been, or volatility. I mean, there's been a lot of volatility and liquidity. It's been pretty easy to move a stock up and down too, because a lot of players are out. So yeah, it's been interesting.
Can you imagine if the Fed came in and started purchasing equities?
Oh, bro. And it might happen. I'm not ruling anything out.
They've said it. They've talked about it for sure.
Crazy. Yeah.
I mean, right now they're saving the bond market, but that's kind of inextricably linked with the stock market, right?
Totally. Yeah, absolutely. Yeah, I don't know, man. We're seeing stuff that I just is crazy. Which is why I'm not taking a lot of action with, you know, my investments, because there's really not been another time or example that you can look back on and be like, oh, this is just like this time, or oh, this is just like, and you know, there's not a lot of historical references to kind of get an idea of what to expect, which is kind of leading to this kind of general unpredictability that we're seeing.
So for our viewers, would you mention to stick to cash, maybe with some gold, silver, even bonds, something safe right now until we have a little better sense of what's going to happen moving forward?
Yeah, I would say so, short term. Yep. And then just be prepared and stay nimble so that when the right opportunities show up, you're ready to go. But I'm certainly not in a fixed mindset towards what I'm doing. I'm staying very open-minded and entertaining any possibilities, including right now crypto, which, you know, for years I've never really even considered as something that I would even park any long-term money into. But now I'm at least entertaining and open to the idea of it. I'm not saying I'm about it. I'm not saying I'm against it. I'm just open to it and we'll see kind of what's out there and how the markets kind of react.
Yeah, the reason why I'm starting to entertain it is because you have a lot of famous hedge fund investors that are just saying like maybe 1% in your portfolio as a hedge against the market. And
Yeah, and you really don't need a lot of it, because if that ends up being the trend and you're right, I mean, that's going to ramp by, could be 100% or more. I mean, that could really save your portfolio if, even though you only 1% or 2% of your portfolio is Bitcoin. If everything else, takes a dive, that could potentially rally so much that, that could really, really save your portfolio.
I got to tell you though, next year, I think the prices of these stocks that we're talking about are going to be much higher, at least the indexes, the S&P and QQQ. If you guys want to get into that, if we see a little low here, I think it'd be a good idea for you to buy. Because next year when the economy is fully open and, God willing, we have a vaccine, you got to think that the market's going to return to where we were prior to this, especially with the injection of 10 trillion.
Yeah. Yeah. I mean, if you look at, like, for instance, I'll pull this up real quick and then we can be done. But if you look at SPY, let me make sure I have my moving averages where they need to be. Yeah. Hold on one second. So if you look at SPY, we bounced right off of the 50-day moving average. So if you look here, obviously here was the big, let me get rid of the VWAP. Oops. So if you look at traditionally the two moving averages that people really pay attention to are the 50-day moving average, the 100-day, but the 200-day typically are the moving averages you want to pay attention to. If SPY can get above 300, which I don't think it will anytime soon, but if it can, I would then feel comfortable saying that our market is on its way to totally recovering. As long as we're below 300, I'm still pretty bearish on the market overall. But you can see we had a bounce right up, pretty much right off this 50-day moving average. If we break below this 50-day moving average, so that's at 270, I think there's a chance we retest the lows, but we could, come back down to this range right here, like the 260, 245, somewhere in there would probably be where I would start to buy, and then try to get some down in here if I could. And then if we hit all-time lows, I would be I would be all in a big way. But yeah, that's kind of how I see the market right now.
Look how quickly we came down.
Oh, I mean, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. That took 20 days.
The amount of money lost in 20 days is just staggering.
Staggering. And what's even crazier is that took 3 years to build.
Yeah, that's Trump's presidency right there.
Yeah. Yeah, that took 3 years to build all the way up for it to crash in 20 days. It's crazy. That's why I say they say the stock market takes the stairs on the way up and the elevator on the way down. Crazy.
Oh my God. All right, brother. Well, I appreciate you coming on. Yeah. We'll do another one next week. And if anybody's got any questions, just shoot me a text and we'll include it next week. All right.
Cool. Sounds good, guys. Thanks for taking the time. Enjoy your Sunday night. See ya.
Later.
Thank
you.
Thanks.
Bye, guys. You got it.